Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, February 26th, 2019. All right, folks, I wanted to start on Boeing's chart here. Boeing flattish today, but yesterday is what caught my eye. So we saw for the first time a little bit of a topping tail there. The stock has run an astronomical 47.25% from the lows just 2 months ago. Now, if this was a small cap or a mid cap, we'd say, yeah, that's an awesome run, but, it's a smaller mid cap. Those things can do those type of moves every so often. What's crazy about this is a mega large cap, $250 billion plus market cap, and it went up 47%. That's insane, folks. I mean, that is literally nuts. All the way up. I mean, if you had asked me right here, I would have said, okay, double top right here. It would stall out. It didn't. It blew right through it. But finally, yesterday, we saw a little bit of a topping tail. So this is the first indicator that this might have run out of steam. The topping tail represents distribution, and that's the important thing here. So when you see a topping tail on a stock, it's distribution going on. And what that means is basically you have buyers pushing the stock up initially. They're excited early morning. Usually the average investors are the early morning buyers because they've been thinking about it overnight. They can't wait. As soon as the market opens, they throw their limit order out in the market, buy some more market order out in the market, and just buy it up. And then what ends up happening is the stock pops up like it did yesterday, and then as institutions utilize that, they start to sell into it. So the big boys start selling into it, which pulls it back down, and a close right around the lows tells you that institutions obviously were selling throughout the course of the day, and the stock obviously closed near the lows. Now, again, it's not the end all be all. Topping tails can fail, but the thing is, you can really easily tell if they fail. The way you tell if they fail, any daily close above that topping tail high negates the power of the topping tail. So this is an educational video in that respect. So again, if let's say tomorrow or the next day we close above that high, then you ignore it. You have to look for another indicator that's going to tell you that Boeing is coming down. But right now, it's still intact, and to me, this is a short now based on that topping tail. And what's kind of cool about it is, let's say you short it today at 427.23 current price, right? The topping tail yesterday was right around 430. So any close above 430, which is only $2.65, you just stop out. So I mean, in the scheme of things, it's such the beautiful thing about topping tails. It's such a tight, defined stop that it's really worth it in my opinion, because you're risking $2 and change to essentially. I mean, if this is the top, a technical retrace would bring you right back here. So I mean, you're looking at basically from current levels. You're looking at north of $35 of profit versus risking $2.65. It's just actually really awesome. I mean, that's an amazing risk-reward scenario there. So, in any case, I wanted to point that out to you guys. I thought that's interesting. In relation to the markets today, markets are really on the flat line. Jay Powell testifying in front of Congress. You can see today down 5 cents on the day, 32 million here mid-afternoon. I mean, this is a sleeper of a day again. What's interesting on the spiders is that you're basically into this pivot point. This was the beginning point. These were the previous pivot, and then this was the beginning point of the big move down in December. So we've essentially eclipsed or erased that move. And you can see yesterday we hit it and we sold off on the spiders. It'll be interesting to see if we confirm that move today by ending negative on the day below yesterday's lows or not. One thing that's catching my eye, the IWM, which is the Russell. The Russell is small caps, and the reason why you pay attention to small caps is because it's a leading indicator. Small caps, obviously, as we all know, are the riskiest assets, right? So it's really a great way to tell if there's risk on or risk off in the market. If you're seeing the Russell leading the market, that's telling you people are willing to take more risk. If all of a sudden the Russell starts to lag, it tells you that big money's starting to pull away from the riskiest stocks, and usually that trickles into the other sectors as well, the larger stocks, the industrials and some of these other things. So what I'm seeing today is the Russell very, very weak. I mean, look at this, down a buck today, 0.64%, and if we go back to the spiders are virtually flat. So I mean, there's a difference of 0.6% there. That's a very big disparity for those two markets comparing each other. So again, what that tells me, and again, this is from an expert here who's done this for decades and decades at this point, a long time, in fact. But what this tells me is that the Russell leading to the downside could be foretelling a market pullback in the next few days. And again, we can just use it as a case study. It doesn't matter to me. You could short it in real life, or you could just use it as a case study to see if I'm right. But that's what that tells me. It tells me that likely we will see weakness either starting later today in the S&P or in the coming days. and the markets could pull back. Now, how far could the markets pull back? I mean, again, if you go back to the spiders, initially there's not a whole lot of downside. I would say this would be your likely first target. So you're looking at like a maybe just underneath a 10-point pullback from current levels here. There's a level right here just above 270 that's a big gap fill. If it accelerates and we get some negative news out there, then you're looking at obviously a much bigger corrective move. I would say your next bigger corrective move would be down to about 264 to 263 right here. So again, let's see if it develops. Let's see what happens in the coming days. But short term, you're looking at a move down to about the 271 level, and then obviously down to about 263.5 here if this first one gets broken. On that note, I'm going to bid you farewell. You guys can come take the 7-day free trial. I just took another 31% profit in the options. I had OLED options puts yesterday. I picked them up in 24 hours. We banged out 30% here, 31%. We took profits when it was down here today. We bought the puts when we were up here yesterday. I had a key 150 pierce right there. It sold off yesterday, sold off today. We took our profits today. It was a beautiful little trade. These are the types of trades, in my opinion, right now that are conducive to this market. Because the market's just kind of in float mode with lighter volume, you'll get these quick intraday moves, but then the market seems to just settle back out. So again, these options plays are really paying off for us in the options alerts. We almost have had a profit every day for the last few days of 25, 30, 40, 50%. And it's been a nice little streak there while we're just waiting for the markets to make that bigger move at some point here in the coming days or weeks. All right, guys, on that note, again, come join us at InTheMoneyStocks.com. We'll see you soon. Take care.